Good morning, good evening, wherever you are. It's Wednesday the 20th of March here in Thailand. It's about 6 o'clock. Okay, this is the Aussie dollar. We've got a really quiet week this week, unfortunately. The Aussie dollar didn't do what I hoped it would do. So we topped at 71.19 this week. So I had a selling opportunity a little bit below that, which I can't really say is working. We've dipped to 70.82. We've got a little bit of support down at sort of 70.80, 70.70. Below 70.70, I would say this is more negative. So if you're still holding those shorts, you want it below 70.70. Obviously, a break above 71.20 is more positive. We need to get through very minor resistance at 71.30, and then we can test the 100-day moving average at 71.60. So I think those are the levels you want to watch. We are in a bear trend. You can see that more clearly on the weekly chart. So I guess being short is the ideal trade. A break below 70, as I say, 70.70 would be more negative. I could see us quickly going to 70.50, 70.40, and I could see a break below 70.40 targeting 70.25.20 and then 70.00. So the New Zealand dollar is trading sideways, like so many markets, especially against the dollar. We've got this pennant formation. You see that trend line here. These trend lines are about a month and a half to 2 years, to 2 months old. Right. The upper trend line is holding. We spiked higher on Monday to test the trend line and came down. We did the same thing on Tuesday. We've actually got a doji there showing yet more indecision in this market. So I would say that the pressure is to the downside, of course, unless we break above 68.75. That's fairly obvious. Moving averages are mostly trading sideways, so we could trade down to 68.2015. We've got the 100-day moving average at 68.00. That should offer some support right in the middle of the range of that pennant. Obviously, if we get down here, well, we'll talk about that if we get down here later in the week. So that's one to watch in New Zealand dollar. If you did sell up at the trend line, that's looking okay. If you're only subscribed to the video analysis, then you wouldn't have that New Zealand dollar trade, but if you are subscribed to the premium subscription, you would have got that trade. This is the dollar yen. We have a trend line going back to the beginning of February, which comes in at 111.14 with the 100-day moving average at 111.25. So 111.25, 111.14 looks like good support. We're going to have to get back above the 200-day moving average, which I think is around 111.45. For a more positive outlook, I mean, this is just dribbling around, isn't it? It's just not really doing anything. There's no purpose. There's no direction in this market. But those are the levels that you want to watch. On the weekly chart, more important levels would be, you'll remember this from last week, 110.85.80, 112.10, 112.20. So those levels would be worth trading. They're certainly holding at the moment. And then the very minor levels are on the daily chart, which I've just told you about. My big trade for the week is selling the euro US dollar at 113.60, 113.70. You can see one reason why here. There's the trend line and the 100-day moving average. On the short-term charts, there's also a couple of things telling me to try a short. We're getting into overbought territory in a market. Well, I can't really say we are in a downtrend. We are in a 2-month downtrend, so I guess we are at least trading with the trend. Looking at the weekly chart doesn't really tell us a lot more, although that kind of does show more of a downward trend, doesn't it, when we look at it on a slightly longer perspective. This 200-day week moving average comes in at 113.35.40, so it would be useful if we could start holding below there, useful for our shorts. This is the only trade that I've done for my managed account investors today, or yesterday I should say. So what I really want is this market to test the best support for the day at sort of 113.20, 113.15. That would be nice if we could test it. It might hold today. As I say, it's the best support of the day. I'm not sure if I'd be buying into a long there. If you're a scalper, you might want to try and see if you can nick 20 pips out of it. But I would stop below 113.10 actually. If you are a scalper, break below there should be more negative, and I would be quite happy to see that break below 113.10 for my shorts. Dollar versus Canadian. Right, I did suspect that we would actually break 132.90 this time. And, well, actually, I thought we might do it yesterday and we didn't. That buying opportunity worked again. But, how many times did we test that? 1, 2, 3, 4 times that level worked. So if you were scalping that level, I'm sure you're pretty happy with it. I did think eventually it would break lower, and it did break lower on the 5th go, not the 4th go. And we dipped to the next target. Well, the nenext target was 132.45.40. We dipped to 1 pip above there. So that was tricky. If you were selling a break below 132.75, you were offered, well, only 25 pips profit really. And you'd have had to have got out and then held it. I wouldn't have expected us to bounce back so strongly, but we have. What's this telling me? I really don't know. I'm confused now with the dollar Canadian, so I'm just going to leave it alone. The weekly chart doesn't really tell me anything either. So, yep, I'm going to wait for the next signal. For my premium subscribers, we had a short up at 113.10.11, so that one worked. If your short gold is looking okay, we've got a good 5, maybe even 6 point profit in that trade so far. I can see we have dipped to, yeah, we've been to 13.05. So tricky this one. We've got this mid Bollinger Band area around 13.05, 13.04, and also the 55-day moving average. So the question is that as far down as we go? It certainly is possible. 5-6 points on a trade in a week like this isn't bad. You want to probably take profit on at least half of it, just in case we do bounce from there. It's not the strongest support level, I have to admit, but there is a chance we can bounce. Anyway, if we start breaking below 13.02, this should be much more negative for gold today. I'm going to run through some other pairs just for some background information, but we're not seeing a lot of opportunity. Euro versus the Aussie dollar. I think you could just call that sideways, couldn't you? So good luck with that. Canadian dollar versus the yen. Well, we came to retest this 2.5 month trend line and rejected it, so I guess that's negative, and it's also going to be negative if we hold below the 100-day moving average at 83.65. You can see these long upper wicks giving us an indication that there's quite aggressive selling going on there whenever we try to push higher. So I guess pressure is to the downside in this Canadian dollar versus the yen. Not very convincing. There's nothing on the weekly chart that tells me anything exciting, but I guess I'd rather be short than long. If we were to have a spike up into the end of the week, we're going to hit trendline resistance at around 84.40 with the 200-day moving average at 84.50. So that should be a nice little entry point, and we could have a stop above that mid Bollinger Band level of 84.60. So that's fairly tight, pretty low risk. You could put in the stop at say 84.70, selling it at 84.40, 84.50, and then see if we dip down. Yeah, we could be dipping down to 83.60. Certainly, yeah, that looks like a decent opportunity. Aussie versus the New Zealand. We spotted the chance for a rally last week, but that's been killed on Tuesday with this big negative engulfing candle. We are in a negative trend, that's for sure. So this looks negative again. We can't ignore that candle. We've recovered from oversold conditions in the bear trend, so I think pressure is going to be to the downside in the Aussie versus New Zealand. If you are still long from that little buy signal, you want to get out. There's probably no profit in the trade if you're still in it. I'm hoping you got out before that at that trend line. You can see the trend line held. The trend line comes in today at 103.50.60, so you may even want to try a short there and see if we dip down to sort of 103.20.10, but doesn't look positive. Euro versus the New Zealand dollar. This could be preparing for a move. You can see it's trading in this triangle pattern since December. Upper trend line at around 165.90, 166.00. We did try a break above the trend line earlier in the month. Maybe we'll try another break above the trend line again. So I would suggest if we get through 166.10, this will look more positive. 166.50 the first target, 167.10 the next target. Well, they'll be slightly lower by the time we get there, but you get the picture. I'll update you on that. Lower trend line at 164.50, 164.40. Again, we spiked below there earlier in the month, but it did hold. So it's quite interesting, this triangle pattern. Let's watch it. Let's see what happens. I'm desperately looking for something to break out and start a trend that we can follow. This hasn't happened yet, so the idea would be to sell at the upper trend line, buy at the lower trend line, and then stop reverse into a position if we were to see a break.